MicroStrategy, the largest publicly traded holder of Bitcoin, returning to profitability. This after taking an impairment charge of nearly $1 billion last year. EPS exceeded estimates but missed revenue expectations, adding more Bitcoin to its balance sheet, which now totals 152,333 Bitcoins. Joining us now, MicroStrategy Executive Chairman Michael Saylor. Michael, great to have you on the show. Speak with you again.
Yeah, thanks for having me.
So when it comes to MicroStrategy, you really have this dual strategy. It's both an operating company focused on business intelligence and what some analysts would call a modestly leveraged investment play on Bitcoin. Does the marriage continue to be worth more than the sum of the parts?
Yeah, absolutely. The operating company provides diversification for investors versus the volatility of Bitcoin, and it also allows us to borrow money very cheaply. Our blended cost of capital is like 1.5%. And we're able to invest that money into Bitcoin. And on the other hand, our Bitcoin investment Bitcoin itself is up 145% since we started buying Bitcoin. And that Bitcoin position creates the volatility in the stock that allows us to borrow and raise capital cheaply in order to buy more Bitcoin and grow the business.
Now, I know you retired one loan earlier, I guess, last quarter, and brought your leverage down. When I hear you talking about being able to borrow cheaply, are you doing that right now?
No, we're not borrowing right now, but we go through successive cycles of leveraging and deleveraging. We've been deleveraging now, and generally our decision about whether or not we leverage or deleverage is a function of the market opportunity and what we think is most accretive for our shareholders.
Okay. So in terms of this rally we have seen in Bitcoin, what do you attribute it to, especially on a day where we've seen other folks who are invested in the asset class say soft landing is really what the rally is contingent upon?
Well, really, there's a growing consensus that Bitcoin is a unique and valuable international asset, and that's being endorsed by politicians. It's being endorsed by regulators. It's being endorsed by investors. You're hearing money managers like Larry Fink say this. And that has created a change in sentiment. You know, the odds of spot ETF being approved were 1% 6 months ago. Then they went to 50%, and this morning they were 65%, according to Bloomberg analysts. So that's really driving the near-term sentiment. But plus the fact that there's so much chaos in the crypto industry, Bitcoin is emerging as the safe haven institutional asset if you want to play this space without trying to parse through the politics, the legal, and the regulatory complexity.
Would a spot Bitcoin ETF be good news because it's a tide that lifts all boats in terms of the price of Bitcoin and thus the price of MicroStrategy shares? Or is it something that could actually dent your investor base as you see some folks that are invested in MicroStrategy specifically to have a liquid option in Bitcoin shift there?
Well, I think a spot ETF is great news for the space. Bitcoin, you could think of as this beautiful house in a scary neighborhood that you have to pay for in cash, takes a year to buy, and you can never rent it. The spot ETF is like that same beautiful house in a nice neighborhood, and you can buy it tomorrow, no money down, and you can rent it and refinance it from your bank. It's not a threat to MicroStrategy. MicroStrategy is like that beautiful house with 10,000 acres of ranch land behind it that generates cash flow, that has a management team that can borrow money at 1-2% interest in order to develop the land. So we offer yield and we offer leverage through active management, which is unique for a set of our investors. We obviously don't have room in our capital structure for tens of billions of dollars of sovereign wealth or major hedge funds, so they need a spot ETF in order to take a position in the space.
Michael, I know that in talking about the price performance of Bitcoin, your time frame is going to basically determine whether it's done amazingly well or has been disappointing. But if you go back 3 years, it's about where the price was in dollar terms 3 years ago. In the meantime, we've had, the most inflation in 4 decades. We now have a lot of questions about the size of the fiscal burdens of the United States. And also, as you mentioned, Bitcoin has emerged as kind of the survivor and the original digital asset of this type. In other words, it's kind of seemed to have created some distance against other tokens. In that context, are you disappointed that we're still at 30,000, or does it matter what the dollar price is today?
No, I think looking back 3 years is very clarifying. 3 years ago, Bitcoin was about 10,000. And so if we look at the 3-year chart from August 10th of 2020 to today, Bitcoin's up 145%. The S&P is up 37%. The S&P is the cost of capital. Gold is down 3%. Bonds are down 18%. MicroStrategy is up 254%. And our enterprise value has increased by a factor of 10 by $8 billion or something. So we're glad we adopted Bitcoin. We would say that Bitcoin is returning 4x the cost of capital. And if you're not getting 37% gain in those 3 years via the S&P, then you're not keeping up with the cost of capital.